Welcome. Champion Bear is live again. We are selling off. I'm wearing a crown today. I am wearing a crown. If you've been watching and I say this a lot, but I'm right a decent amount of the time. I'm also wrong sometimes, but look, if you've been watching the recent streams, like for the past week, I've come on the stream every single night, said I'm bearish. For the past week, I'm bearish. I'm still bearish right now. It's probably the most bearish I've been in the whole entire year. And I like to say by nature, I'm a bull. But the variables are just bearish. And I've tried my best to explain that the past week on the streams. And we're selling off. We had a rough day in the market. The Qs were down 2.5% at the close, and now they're down another percent. Well, the Nasdaq few percent overnight. Meta had earnings. It went up a little bit at first, and it closed, I believe, after hours red. Really, the story this week is that, from what I've seen, most of these earning reports, at least in terms of their EPS and revenue, actually look pretty good, but the market just is not digesting them. They are not being digested. And regardless of some of these earnings, even doing it okay after hours, it's not really helping out the market that much. I mean, we've gotten through a decent amount of them at this point. We still have some left. Apple's going to be a big one next week. But we've gotten through a lot of the big names already, and it just hasn't helped out the market. I kept saying that the only not the only, but one of the major ifs to my whole entire bear thesis in the past week would be, yes, there's a potential that earnings save the market, and so far they just have not. So we are continuing to see selling. I stopped looking at futures on the streams probably a while ago, but tonight we're actually going to look at some futures because they are moving quite a bit. Really, a lot of the story this year is that futures were not moving a lot, at least around the time I was streaming. A lot of times we got like pre-market action, and that would lead to a lot of the gaps we saw this year. But we've had a pretty quiet, I might be statistically wrong, but from what I can remember, we've had like pretty quiet night sessions for futures for the majority of the year, which is why I haven't really looked at them. But right now, we are getting some action, and just in general, I haven't even looked at these futures charts on like higher time frames, so I want to take a look at how they look. Starting off with the S&P futures, ES1, and Monday and Tuesday in the Discord, on Twitter, on the stream, I kept saying this is a dead cat bounce. It had all the makings of a dead cat bounce. If you watched last night's stream, I never have certainty, but the probability of what we saw Monday and Tuesday being a dead cat bounce was just very high to me. I had a pretty big loss I talked about on Monday because I got in puts a little bit too early, and Monday was my worst day in like a month. I was in the puts a little bit too early. I'm actually still holding some of those puts from Monday, and they've come back quite a decent amount. Theta did kind of beat them up, but the timing, I was a little bit impatient on getting into the puts, but right now we are starting to see this market selling off. So yeah, I mean, you retested the lows from October, but you were just making a bear flag the whole entire time on the 1 hour time frame, and then you broke under it today with the bearish engulfing candle kind of across the board, give all of those 2 days of gains. And now we're even lower after hours. We do have GDP tomorrow morning, so that's going to be very interesting. That is something to keep a note or to keep an eye on. I will say that, just look at this futures chart. You're still just in a zone. We used to see a lot of resistance here pretty much the second half of 2022 until we broke it in May of this year. We used to see a lot of resistance in this area, so it could potentially act as a support. So keep that in mind. We are entering a new support level, at least for the S&P. For the Nasdaq, there's like nothing. The Nasdaq just looks like it's on a mission to go see, give the 200-day average a little kiss. That's really what this looks like. The major level to hold was these lows, and as of yesterday, as of today, you broke them. So pretty big technical breakdown today. The Russell is actually also close to a support, so the S&P and the Russell are at supports, the Nasdaq's kind of not. And if these tech stocks, which have failed to really hold up the market with earnings, continue falling, it could break the S&P and the Russell under support, And then you have a much higher potential of a crazy sell-off. The interesting thing right now is that we are now back at where small caps were in 2020 before we even recovered from the COVID crash. Small caps are at a lower price than what they were before the COVID crash. I'm not trying to talk about politics or health or anything. I'm just saying, for the sake of charts, imagine the COVID crash didn't happen. And I say stuff like that, and like, maybe if I was streaming for 1,000 people right now, I'd get canceled for saying that. I'm not actually really talking about code right now. I'm just saying, for the sake of this chart where we saw a V-shaped recovery. Let me just put it like this. Imagine this V-shaped recovery on this chart never happened, all right? Then we're pretty much at a lower level than we were at in 2020. It's that simple. Regardless of that V-shaped recovery, small caps are now performing worse than they were 3 years ago. It's not the same for the NASDAQ and the S&P, but that is important to know, right? Before we actually talk about the SPY, the Qs, the Russell, right now I'm just looking at the futures. I want to do a quick look at other markets first. Starting off with Bitcoin, third day in a row, it's now testing this 35K breakout. We talked about that bull flag on the 1 hour chart last night on stream. That played out a little bit today. And yeah, 35K is a big level. Just see how it continues to react to that level. Ethereum's still flirting with the 200-day moving average. Let's head over into bonds really quick. This is not that surprising to me. I did talk about that tweezer top on the US 10-year, but I was saying that we got a shooting star over here, and it just led to a small pullback, right? You can get these bearish variables, like we also had the potential for that classic bearish divergence on the daily. Now, when we printed that tweezer top, I did believe that the US 10-year would pull back, but if you remember on the streams, I was saying it's probably just going to pull back a little bit, keep going. And that's what happened. You pull back for 3 days, you got a bullish engulfing candle today. And now it could be set up to break above 5% potentially, which is insane. Like I said last week on stream, not trying to create fear, but this is a fact. The US 10-year has not been this high since just before the Great Recession. TLT, the 20-plus year Treasury ETF, has not been this low since the Great Recession. The last time we were at 5% on the US 10-year and the low 80s on TLT was right before the Great Recession. That is a fact. Do what you want with that fact in your mind however you want. I am just stating a fact. All right, let's take a quick look at the VIX, bouncing back today off the $19 level. I'm not a huge fan of like really charting the VIX anymore. I feel like it's become a little bit less important. I know a lot of people agree with me on that. But longer term, again, you're now back above support in this range you've been in post-COVID crash. All right. Oil sold off today, went down to fill this gap. Well, I keep calling oil, I think WTI is probably like a better one maybe to look at. Or yeah, these oil futures is probably like a better one to look at. I've just been using OIH, which is like an ETF of oil services. So it's not literally oil is at 329, but this ETF of oil is at 329. I've just been using it to track oil, and I'm sure there's better ways to do that. Because if we take a look, like they are pretty similar, right? This is where you bottomed, you started rallying, you dipped here, you went back up. They do move very similar. So we will see what happens there. Gold continuing higher. Hang Seng Index had a really pretty rough day. Actually, no. It had a good open and gapped up when we were live on stream last night, and then it just continued to sell off the whole entire day and just gave up. Then finally, the dollar currency index. It did break down from that supply line. It did. And it back tested it, but it might not be confirming a leg down. What might be happening here is you actually were able to hold that high from March as a support. Now you're creating a bull flag, getting bullish divergence on the daily, and this might be headed higher, which will be interesting because there's been historically a decent inverse correlation or inverse relationship between the dollar currency index and Bitcoin, and right now they're kind of both going up at the same time. But nonetheless, this does have a pretty decent bull flag, backtesting previous resistance as a support with hidden bullish divergence. So that's what's going on outside of the market. Let's talk about the market today. S&P down 1.5%, and you pretty much broke the 200-day moving average last Friday, spent the last 2 days trying to get back above it. The bulls failed to do so, and then today we flushed. Yesterday I shared QQQ puts and premium. Most of the time when I share QQQ or SPY calls or puts, they're typically 0 DTEs, quick trades. Yesterday I did something a little bit different and I actually shared 1 day out expirations. Yesterday I shared the expirations for today on QQQ puts. Those went up 300% since the alert. And a large reason is because the lower time frames just looked horrible. And I charted this out literally live on stream last night, this bearish pennant. And like I said, I did not think you were going to continue to hold these lows. It just looked like they were going to break, and that's what happened today. So now you're testing your lows from Monday of this week. You're back at it. However, after hours, you gave it up quite a bit, and even more right now if we're looking at futures. So if we don't get a good GDP tomorrow morning and we don't reverse in the morning for the open, then we'd be opening under all of the support pretty much, including the 200 average. And yes, there is a zone over here which was resistance for a while. That is a very interesting area to look at. Yes, you are starting to ride the demand line of this channel / flag on the daily. Yes, you have the potential for classic bullish divergence. There are some things that in a couple of days could lead to another bounce to come in, but again, we're probably just going to make a lower high and then go a little bit lower until we really start to see a shift in the market. Even we are going to bounce. We're not going to go straight down to zero. I don't think we're not going to go to zero either, but we're not just going to keep going straight down even if we saw for the next 2 months. There's going to be bounces along the way, and who knows, maybe we just literally continue going down in this channel for a long time. Like there's going to be significant bounces within that. So it's just a matter of, until you break that supply line, it's kind of just a downtrend. We're just in a bearish market right now. It's still a bull market for the year, I guess, but it's definitely a midterm bear market. That's what we've seen since its top in August. If we look at the Qs, I talked about the inverted cup and handle. I charted this last night on stream, and that broke down today. Actually extend. It's the wrong. Extend some of these zones just in case we do get down to them. So we broke down from this 1 hour cup and handle on the Qs today, lowest close since I think June. Lowest close on the Q since June. The last 3 times you were at this trend line on the daily, you did get a bounce. Like I'm saying, like we're breaking support levels, but it will be interesting to see if we still react to these demand levels on both the SPY and the Qs because we're still at these demand levels. So there is that. Let me say something though. Futures are down 1% for the NASDAQ. If this were to open down 1%, you'd be breaking down from a bull flag on the daily. Breaking down from a bullish pattern, especially on a daily time frame, is very big. The probability says this should break up. If the 35, whatever exact probability it is that this breaks down actually happens, that's pretty bearish. Like you have bullish patterns, but when your bullish patterns break down, it turns from just a bullish pattern to a very bearish pattern, and vice versa. If you have a bearish pattern and it breaks up, it turns from a bearish pattern to a very bullish pattern. Because you're going against technical probability. That means that the sellers or the buyers, whichever one is reversing the trend of the pattern, are that strong that even though they had a 35% probability, they still won that coin flip, that weighted coin flip. So keep that in mind. If we break that, that sets up more of a potential thesis for more selling. So if we do gap down tomorrow morning, keep that in mind. And then you have your 200-day moving average on the Qs at 339. Next up, Russell 2000. You are testing your line of death for right now. This is like your support, 163. It was your lows from June. It was your lows from October. If that breaks, that'll officially be the lowest prices for small caps since the COVID crash. And the SPY and the Qs are nowhere near that right now. For the SPY, that would be like all the way down at 354. For the Qs, that would be all the way down at 255. But small caps have just so heavily underperformed, really since the end of 2020, since the beginning of last year. They've just heavily underperformed the market. And they're now at a worse point than they were at before the COVID crash. So keep that in mind. Next up, ARK ETF right back down to the 35 support. I was giving it a chance. It had the wedge, it had the potential triple classic bullish divergence. Then again, like I just said on the Qs, if you get a bullish pattern appear and then you break down from it, which might be what's happening right here, you could flush this $35 level and go to the bottom of the zone at 33, which is your lows from the COVID crash. So small caps are at their lowest prices since just before the COVID crash. Mid caps, growth stocks, speculative names, we sell off 2 more points on the ARK ETF, will be at their lows, if not potentially lower and worse off than they were during the COVID crash. Very crazy. Okay, so that's really what's going on with the market. We did have Meta earnings today. Let's go take a look at that. It is a premium swing. And after hours, it sold off a little bit more. The stop on the swing is 285. It started off well. Maybe the first target should have been a little bit lower, but it was only 11% gain. It broke out of a nice triangle on the daily. It's just the market started turning around. Now the earnings reaction is not great. So Meta is selling off. We also had a couple of other recent earnings. Let's go take a look back at those, see how they've been performing. Netflix going a little bit higher. Microsoft gapped up, sold off a little bit intraday. Google gapped down and sold off more intraday. Google looks disgusting in my opinion. Just gave up 129. Lowest candle close. There's this gap to fill at 120, 123-ish, 124. Not great. And then the other one, Tesla, it's actually been doing a little bit of a better job of holding this key zone. We'll see if it continues to hold. But yeah, pretty ugly day for a lot of other stocks. Apple testing the 200-day moving average yet again. Now for the newer swings, I'll share one of the premium swings from this week. I put out a short swing on Nvidia for premium members. It's currently up, I think after hours it sold off like another percent. It's currently up about 5%. And Nvidia's down to, I believe, around 410 after hours. So Nvidia's pretty much testing this level after hours. If that flushes, then you're breaking down. You already broke down and even back tested this ascending Brownian wedge on the daily, but then you're also breaking down from this 4-hour head and shoulders and then this 1-hour inverted cup and hand flush under that. So keep that in mind. That is a short swing. I also put out a long swing in premium. That's actually in profit. It was up 3% today, even though the Qs were down 2.5% today. So I've been trying to switch up the style a little bit with the swings. And then of course we have the Mara and Riot swings, which are down just a little bit. But like I said, when I put them out, cost averaging is key here. They were already up a lot on Monday and Tuesday. I knew that when I put it out. Cost averaging is key. And Bitcoin is still holding up. So that's okay. Hopefully they track more of Bitcoin and less of the market, assuming Bitcoin goes higher and the market goes lower. That is the hope. And if that's not the case, or if Bitcoin does sell off, then they have their stop losses. So that's pretty much what's going on. Anybody in the chat, if you have any ticker requests, feel free to drop them. I actually cannot see if I can access. I can't see. Okay, never mind. On my YouTube chat, I don't know why they did this, but they put like this little emoji button here. I'll show it to all of you. This is what my YouTube chat looks like. And they put this little emoji button, so I can't see the actual ticker you were requesting. But on my other software, I can't see. Yeah, we're going to take a look at Fisker. Where is it? Fisker broke down from this 533 support today. So breakdown for Fisker. Again, I love Fisker, but when it comes to charts, I'll be honest. Fisker did break down from this support today. It does have 2 more supports, one at 476 and then another one at 426. So keep an eye on those as well. Again, I don't know if you consider Fisker a small cap or mid cap, but both of those sectors of the market are just doing horrible. And most of the stocks in them are hitting multi-year lows. So it's just kind of grouped in with that. My opinions of Fisker long-term remain the same. Goal is to make a good amount of money short-term trading in the next year and then buy a lot of long-term Fisker. Even if it goes down to like $3, I'll take it. So I'm not too stressed about it. I'd actually rather Fisker be lower than higher right now. Because my horizon for Fisker is at least 5 to 10 years away. So cheaper it is now, the better for me in 5 to 10 years, assuming I'm right about it and it goes up. Hey, I could be wrong. Let's take a look at NEO and AMD. AMD did stop out today. And it went lower after hitting the stop. It broke the 200-day moving average. The wedge, kind of similar to the meta swing. It just didn't play out all the way. The market started reversing against the meta swing and premium and the AMD swing for everyone before they were able to fully play out. And AMD, the stop was there because the 200-day moving average was there, and it broke the 200-day moving average. So could be headed lower now. if it can't reclaim that. Neo, I think Neo had a pretty good day yesterday. Gave back a decent amount of it today. It still has this wedge and potential classic bullish divergence. Definitely keep an eye on HSI if you're looking at that one. We did look at Apple. Just a quick look at it again. It's just simply testing the 200-day moving right now. So yeah, let's talk about levels heading into tomorrow. If we look at the SPX itself, I know on the SPY that I'm saying that yes, the SPY is entering this zone. If we're going to take a more literal approach, like my SPY chart right now is a little bit more bullish looking than my SPX chart is, and that's for a reason. You can see I have a lot more stuff on my SPY chart than my SPX chart. I like to keep my SPX chart a lot more just like only like the most important of levels on it, which is why you can only see like 4 of them on top of us. I'm probably going to start adding some levels down over here. Might as well do it right now. That's probably the next major level on 4044. Higher. 4058. That's quite a bit higher actually. And then after that, wrong. After that, 3807. So those are like the next major levels for SPY. You broke the 200-day moving average, you back tested the breakdown, and then you confirmed the breakdown even more today. Broke this trend line you've been holding since last October. And a lot of people are watching this. Everybody knows that the S&P broke the 200-day moving average. A lot of people are watching this trend line. You have the hidden bearish divergence playing out. If this breakdown is real and futures are, for right now, implying that, your next major level, 4058 on the SPX, is another 3% lower. So, I don't know, it sounds crazy, but we are technically selling off slower than we went up in this area. Look how quickly we went up in this area. We're selling off slower than we went in this price range, to be fair. Solo, basically worthless now. There used to be a lot of hype around Solo back right after COVID, and a lot of people gave me hate for hating on this stock. Everyone was saying it was going to go to $40 or whatever, and I kept saying it's probably going to become worthless, and it pretty much is right now. I don't know, like your major supports that broke both of them. It's now sitting pretty much at all-time lows, so there's no more support. You know, these are the types of companies that could potentially get delisted. I've seen it with a lot of similar names. That's how it is. Amazon. Yeah, wasn't too happy about how that chart was looking. I didn't like how it was feeling to hold 126, rolled over today. Next level is 116-ish with your 200-day moving average. It's also like a low from June of. I don't know if you want me to look at Sol, the stock, or the crypto. The stock, there's not much to talk about. Guess there's a support at 216. I want to look at the crypto. This is pretty interesting. 3 rising values pretty much. Testing a breakout of these highs from July. If it breaks that, your next level is $39. I wonder how a lot of these smaller cryptos are looking. I mean, they sold off quite a bit. Some of them are starting to really move their way back up now. MSTR broke above it's 428 resistance. Next level is 477. What a beautiful swing trade. Should have been a third target. Coinbase hit the first target yesterday. Bearish engulfing today. The important level is 73. All right, so that's pretty much your update for today. In the Discord, links in the description. If you did not see earlier today, there's about 5 or 6. It was 8 before. It's about 5 or 6 spots left if you want to join Lifetime 2023. You can. I'm letting you get a 30% discount on those last few spots. So if you want it, right there, I'll put the link in the chat. And it's actually, I think it's only like $100 more roughly than what it costs to join Lifetime. So if you want it, it's right there. Swing trades, options, you can see it over here. Got a mods chat now, Papa Strata, Zeke, AK, weekly watch list, Bullseye, and I don't want to talk about it publicly right now, but I have a very big plan for a shift in premium, and more details will be announced on that next year. But if you are in premium, I did give you a little bit of a hint as to what that was. Not even a hint, I pretty much told you what it's going to be. So if you want to see what that is, it's in the overview channel. Even if you don't want to join right now, you can get the 1-day free trial on wap.com/championvibe, which is a pinned chat. Go to the overview channel once you get that 1-day free trial, see what I'm talking about. But that's going to be at no extra cost. So I have something very, very early stages right now, which is why I don't want to talk about it publicly. But something is definitely in the works for May, June of next year. So this is, if you want to see what that is, it definitely might entice you to take a look into that Lifetime deal right now. So if you're not in premium, get the 1-day free trial, go to the overview channel, see the message I sent today. Do not talk about it outside of premium, please. And then consider that Lifetime, because you're going to have that available as long as it is available. Now, I can't promise it's going to be there for the next 50 years, but however long it is, you're going to have it available. All right. So thank you all for watching the stream. And also, by the way, I know people that are charging monthly prices that are as much as my Lifetime price. Same. Have a great night, everybody. See you in the Discord tomorrow. And I should be live again tomorrow night, so we'll talk then.